Everybody. Thank you for taking time to attend the webinar. We have here myself, co-founder of Reality Slices, and we have Nagesh, the co-founder of Reality Slices, and we also have Harry Arsin. Harry is one of the um, key developer and has a construction firm in the state of Washington in Seattle. And Harry has bought us an investment opportunity that will have him present and walk us through the deal. Okay. Um, this meeting is we're recording the session so that post meeting we will have it available for all of you to take a look at it, and also for other investors who could not join the session. During the session, if you have any questions or if you want to bring up any discussion, feel free to raise the hand, and I will enable the mic and unmute so that you can ask your questions. We can keep this session interactive, so feel free to ask questions. We have Harry, who is a sponsor with us. He's here to answer all the questions and present the deal for us. Go ahead, Harry. All to you.
Thank you, Pavan. I'm here to present a secured note offering on a luxury ground-up single-family opportunity that we have in the Enatai submarket of Bellevue. It's a very popular submarket in the Bellevue area. There's a lot of high-end homes in the area, very close to downtown Bellevue, and very close to a big tech hub in the area. The address is 10428 Southeast 19th Street. We got this deal off market from another investor that's taken it through the permitting process. So we're buying it with permits approved so we can hit the ground running as soon as we close on the project. Next slide. Some confidentiality and disclaimers here. And if you want a copy of the webinar or the presentation, you can go to the Realty Slices website and it'll be posted there. Next slide. So to give you guys a little bit of background on our company, my wife and I are the sole owners of AKA Investors LLC. Our DBA is Arsin Construction, and there's a link to our website on this page here, arsinconstruction.com. Just wanted to highlight a little bit of our experience. We started in 2007 at the peak of the market, and we started out in remodels. We learned quickly that at the peak of the market, our first remodel became our first rental property because we couldn't sell it in a trending down market. So as part of that learning experience, we've really keyed into what changes in the market could affect our projects. So we've taken that and rolled that into all of our projects going forward for the last 17 years. We've done a lot of projects in the Seattle market. This will be our first project on the east side, and we've done luxury single family in Seattle. You can see the first four pictures there on the left give you kind of a feel of the style and level of quality that we do. We have a lot of pictures on our website as well. The middle bottom picture is a custom wine cellar that we built in a high-end spec home. And then the two pictures on the right there are ground up multifamily construction projects that we either have under construction or we're about to break ground on. And we've done everything from single family remodels to townhouse development, luxury single family, and ground up multifamily development. Projects as large as 50,000 square feet and projects as small as 1,000 square feet on a remodel. Okay, next slide. So a little bit more about this project. It's a permitted 5,700 plus square foot house, 5-bed, 5.5 bath. We are really particular when we're buying permitted projects about how the houses are laid out. We pass on a lot of deals just because we don't like the design, even if the pricing looks good. This one, we really like the design. We've seen the seller that we bought it from, we've seen his work, and we think this is a home run. It's in the Bellevue 98004 zip code. again, very desirable. I think we have another slide on this, but a lot of tech in the area, high-end tech. The market in this area supports homes from the 4 million range all the way to 10 million plus. We'll show you later in the presentation. There's a house 2 blocks over from this one that's pending for 8.5 million, and it was on the market for less than a week. Our lot is a little over 18,000 square feet. In this submarket, people pay a premium for the larger lots because there are lots that are half that size. Those properties would sell for a lot less. People want yard space, they want privacy, and that those bigger lot sizes give them more of that. So it's definitely um, it's a good project and it's a good site. So we're really excited about this one. Next slide. This kind of highlights just west of this red circle that you see here, just west of that is the Enatai neighborhood. And then north of this, just north of this is downtown Bellevue. It's only a 5 minute drive to downtown Bellevue. So you've got all the major tech players basically at your doorstep. It's maybe 9 minute bike ride. Even if you wanted to walk to downtown Bellevue, it'd be about a 30-minute walk. So very good location. Next slide. So the secured note structure. So we're looking to raise $1 million as a second position lien against the property. We've secured financing for the construction loan. It's a $4 million construction loan, and we'll go through the capital stack on another slide. But I just want to highlight here that our company and me personally will guarantee the note, and it'll be a full recourse obligation, meaning if anything happened and the funds could not be returned for some reason, we are personally liable past just this project. So that's to essentially give the investors further assurance that not only do you have security in the property, but you have security with our backing as well. The term length is set to 20 months, but we anticipate the project will take 18 months or less. Our construction loan is set for 18 months, and one of their requirements is that the second mortgage has to be a longer length than the first. So that's why we set it to 20 months, but our anticipated exit is 18 months or less. The interest rate is 15%. It's compounded monthly, so you're earning a little bit over 15% annualized per year, and we'll go through that on a future slide. Next slide. And I guess I should also mention one of the other lender requirements is that the note has to be the payments have to be rolled accrued and then paid at sale of the property. The construction loan does not allow for payments to be made on the second until the project is completed and sold. So as part of the proceeds of the sale, that's how the investors get paid back. So organizational structure and capital stack. So our company, aka Investors LLC, will be providing 150,000 in equity. The $1 million would be coming from the investor note as a second mortgage, and we have a commitment for a $4 million senior loan. I've signed a letter of intent. The property's under contract, and we're moving forward with this project. And this slide is just highlighting capital stack priority as well. So the senior loan, the construction loan of 4 million, gets paid off first or has first priority, and then the second mortgage gets paid off second, but it happens simultaneously on the sale of the property. And then my equity, should anything go wrong, should we sell it for a lot less than we thought, my equity will be the last to get paid. So the $150,000 is something I could potentially lose if we don't hit our numbers or if we go severely below our numbers. Okay, that's next slide. So this slide is meant to highlight the profit analysis and how the funds are being used. So this is the uses summary. And this is the capital sources summary. So similar to what you saw on the previous slide, the second column represents the capital stack, the senior, the second, and our equity going into the project. The first column, we have it under contract for 2.8 million, and we'll show you some land comps on the next slide. There aren't that many, but the ones that we have support or exceed uh, the value that we're getting here. We have we're planning on a $1.7 million construction budget. Towards the bottom of that, we have an $85,000 contingency if we were to run over. The holding costs on the loan of $460,000 anticipates that we would hold the property for a full 18 months at 75% of the total construction loan balance. That's meant to be kind of an average of where, because the loan will start under 2 million initially, and it'll work its way up as we draw on the construction draws. So by the time you get to the end, the full construction loan budget will be 4 million. That's the full loan that'll be used, but we apply a 75% ratio to figure out kind of the overall holding costs for the project. And then other costs is supposed to be kind of a catch-all. $85,000 contingency would go towards any potential construction costs overruns. And I should highlight that this 1.7 million is the cost for us to build it. We are a general contractor and we are a developer, so I'm not marking up the work that we're doing because it's our project. But if we were to take this out to bid to somebody else, it would be minimum $400,000 more than what we have here. And then there's the potential for change orders and whatnot that come up in construction. So that contingency is another piece of that that can capture any unforeseens. Okay, so and then the third column, the exit proceeds, is meant to highlight the gross profit of the project. We believe we can exit at 6.5 million. The selling costs represent listing commissions and excise tax, title and escrow fees. So the total cost we'll have into it is 5.15 million. That's assuming we draw on the contingency and all the other line items on the left. That brings us to a gross profit of $925,000. And if we close out and exit the deal in 18 months, then the second, sorry, this should say second loan interest
Right.
would be roughly 250,000. If we held it out to the full 20-month term, I think we highlight that on another slide, but yeah, essentially the gross profit to us as the sponsor is 674,000, assuming we hit our projections. And I believe, Pavan, I believe we have a sensitivity analysis. I think it's the next
Yeah.
slide. Let's
Right.
take a look
Right.
at that.
I also want to add that the purchase price of 2.8 million for that particular area, um, uh, Harry has got into a deal with this acquisition is along with the permitted plans, typically, when you acquire the land, there aren't any plans and permits, and it takes about in an area like Bellevue, which is very high end in nature, it probably takes about an year to 18 months to get the permits. And we consider this as a very high value off market acquisition, which is the purchase price with the permits in place.
Yeah, it's actually, Pavan, just to add to that, it is a little bit longer. I think there are some submarkets that you can get the permits a little faster. This particular project, they've held it for over 2 years working on permits, so there's definitely a big value in that. And I can highlight that when we look at the land comps as well, where we think we're getting value.
Yep.
Okay, next slide. So the left column is just a carryover from the last slide, and we've got three different scenarios outlined here, showing if we're to run over cost on scenario one, that's we spend the 1.7 million, we blow through our $85,000 contingency budget, and we spend an extra 170,000 on top of that. If that happened, we'd still have us at the bottom line, we'd still have a $500,000 profit. Your second loan would still get paid in full. This is just meant to show that there's enough margin in this to absorb, cost overruns on the construction side. Scenario two, this is highlighting a sales price reduction. So if we can't hit the number that we say we're going to get, it would impact our sales price by over $300,000. It would still cover the second mortgage interest and net us 350,000 in gross profit. And then at the bottom there, scenario three is if we were to run over the 18-month projection, say we go to 21 months, the holding costs on the full drawn 4 million plus the million accruing on the second is about 45,000 a month. So if we ran roughly 3 months over our projected budget, that would be an extra $135,000 that would come out of our end of it, but would still leave sufficient profit in the deal. You could take scenarios one and three. You could take scenarios two and three, and you could see that even if more than one thing went wrong or was out of line with our projections, there's plenty of coverage here for the investor. Pavan, do you have anything to add to that?
No, I think this looks good. You have covered it pretty well. And yeah, as we went through the analysis, myself and Nagesh, we went through different spectrums of analyzing the deal. And given all the three scenarios, I think we have enough buffer in place for the profit margins.
Pawan, there seem to be people in the lobby. Could you please let them in?
Let's see. Let me see here, Nagesh, because it's a. Let me check. How do we? Give me a minute. Let me see here. This should be auto join. Okay. So why don't you continue on this, Nagesh? Do you want to check that, Nagesh, on the Zoom while the presentation is continuing? Probably we need to enable from the. I don't see an option here on the Zoom webinar.
Okay, sounds good.
Yeah.
Okay, we can go to the next slide then.
Sure.
So this is a highlight of the construction timeline. So if we closed in Q1, late January, early February, we can hit the ground running. It's a permit-ready project, so I imagine maybe one week to 10 days for some pre-construction meetings, and then we can break ground. We can do demolition of the existing house, removal of the existing foundation, and then we can start drainage and foundation work on the new house. That would happen in Q2 of 2026. And after that, we'd start going vertical in Q2 of 2026, and we believe we can have the project completed by Q1 of next year, and giving us 3 to 4 months to market and sell the project. We believe Q2 of next year is a viable exit timeline. And I think the next slide shows the comps. If it's not, we'll get to it. But yeah, great. And this is meant to highlight how high, what the area supports, and then how quickly the product is selling in this area. So to highlight our property again, it's roughly an 18,000 square foot lot, 2-story home, 57 plus 100 square feet, and almost 1,000 square foot 3-car garage attached. Pavan, it looks like you went out of presentation mode, just so you know.
Right. Yes. So I wanted to share some of the comps,
Oh, okay. Sounds
yeah.
good. Yeah, so comp number one is a high-end, it's a high-end home on a larger lot than ours that went pending for $8.5 million in just 4 days on market. Because it went pending so quickly, it's possible it went over 8.5 million, but it's hard to tell at this point.
So Harry, you can see the screen that I shared on Zillow.
No, I only see the PowerPoint.
Okay, let me do one more time. Let me share the screen. Um, your screen share. How about now?
Yeah, I see
Okay.
it.
Yeah, good.
So it's a 5 bed, 7 bath home, 8.5 million pending. Again, less than a week on market. A larger lot. This is meant to be more kind of showing what the area can support. Our house is smaller, so it's not like we're going to sell it for 7.5 or more. It's just meant to show the value of the neighborhood. So they got about $1,200 per square foot on this house. I actually walked through the house. It was very nice finishes. It's things that we know how to do. So we think we can hit it out of the park on ours. We
Right.
can look at the next comp.
Yeah. So here, as you can see here, it came on November 22nd and went pending on November 25th, probably there for less than 5 days, on the market. Uh,
Yeah.
yeah. Uh,
Yeah, I think they're due to close next week. We
right.
called the agent. We didn't ask about their
Mhm.
closing price, but I'm guessing it's at or above asking with that quick of a sale timeline.
Right. So this is the second one.
This is another one. So we're on Southeast 19th. This is Southeast 23rd, so just 4 blocks away. Same pocket of Enatai, the Enatai submarket, 5 bed, 5.5 or 6 bath, 5,200 square feet. So it's a smaller home than what we are proposing. And this lot size, I think, is similar. Yeah, similar lot size.
It's 0.46. Yeah.
Yeah. So, this definitely supports our 6.5 exit because we're roughly 10% larger on size. So, um,
Yeah. I'm
yeah.
just into the
And I think
market
this one
on.
sold either unlisted or within like a day on market. So they must have had some pre-sale activity and sold it. Um, right. They might have gotten offers even before they went on market because I think if you look on MLS, it says 0 days on market.
Good.
So you can't sell it any faster than that.
Yep. Yep.
We can go to the next one. Pavan, if we can go back to the presentation.
Yeah. I
Oh,
went to the
sorry,
next
sorry.
one.
Okay, you just jumped to the
Yeah.
third one. Okay.
Yeah. Yeah.
So yeah, this is another one. 5 bed, 6 bath or 5.5 bath, slightly larger than ours, a smaller lot. Um, again, meant to support the price, the area. I know this is a market where the level of finishes you put in, the amount of money you put into finishes, you're going to get back out in sales price. So, depending on how they finish the project is really what defines where they can exit the project. Um,
Yeah. So this one.
it kind of puts the floor of our project at 6 million, but we think 6.5 is a very feasible exit price.
Yeah. And this too, if you look at the dates, it went pending on the same date got listed. Um,
Can you scroll back up to the top? I want to look it up on MLS because I think this one might have sold unlisted. And they just posted it on MLS to show the sale.
right,
So that means they probably didn't even have a competitive bid process,
right, right,
implying that they could have potentially gotten more for the house. Can you
right.
scroll up to the top, please, so I could see the
Sure.
address?
Yeah, yeah.
Uh,
Two.
2145 104th.
Yeah. I think the dates show the same, Harry. That is, 228 is when it's listed, and 228 is when it is went for pending.
Yeah, yeah. On MLS, it shows 0 days on market. So
Right,
the one that we looked at previously
right,
was a sale that was unlisted. So
right,
they essentially got it under contract and then they just put it on MLS to show the sale.
right, right. And then here are the two other land acquisitions you want to talk about, Harry.
Yeah, so this is again, we're on 19th. This is on 22nd Street, so just 3 blocks away. They're pending at 2.9 million. It's a 20,000 square foot lot, so it's a little bit bigger than ours. It's an older home and just a little over 2,000 square feet. So traditionally, I don't know who's buying it, but traditionally, a builder would come in and tear this down and build a 5 to 7,000 square foot house on a lot like this. And it's at 2.9 list price. I'm not sure what they're going to close at, even if they close at 2.8 or 2.7. They're closing on land that's not permitted, so they're going to have to spend another 2 years or so getting construction permits for new construction. So this is meant to highlight the value of our land at 2.8 million with permits in hand, ready to go.
Yep.
And then this is the last comp. This was purchased by J Mark Homes. I believe it was a little over 2 years or 3 years ago. They paid $3,030,000 at foreclosure auction. They're under construction on the house right now. They're building a 7,000 square foot house. So the Zillow specs here, the 6 bed, 6 bath, 7,000 square feet, shows you what it's going to be, because they're reflecting what's been permitted and what's being constructed currently on the lot. This is a larger lot, similar to the first comp that we showed you that was an $8.5 million sale, and it's actually right next door. So again, over $3 million for unpermitted land, and they spent the 2 years taking it through the permitting process, and now they're building the house. And again, just meant to highlight where we think the value is at 2.8 for our permitted project.
So going back to the presentation, Harry, yeah.
Yeah, and I guess one of the biggest things to highlight is with rates being higher than they were 3 to 4 years ago on construction, having control over your enter and exit timelines really changes your profit metrics. Because typically when you go in to get something permitted, you don't know how long it's going to take. You don't know what the city's going to throw at you. You can budget 18 months. It could take 2 years or more. But that part of the equation has already been resolved for us. Again, we can hit the ground running on this project, so that's why we really like it. And the last 2 years, our company is only focused on buying permitted projects. We've picked up 2 other single-family homes and that we built and sold. Those were permitted, and then we also we're under construction on a 136 unit apartment project that was purchased permitted. And we recently closed on a 65 unit project that was also permitted. So our focus has shifted until rates kind of fall back down. Our focus has shifted on projects like this where we can control our exit timeline much better.
Yeah.
So again, just highlighting some of the reasons why we like this project. A+ location. Bellevue School District is where this one is located. It's #1 in Washington State and ranks probably top 20 in the nation. It's really high up there in terms of educational experience and quality. Another big one that a lot of people don't know is Amazon has, over the years, shifted a presence to downtown Bellevue. They built a 25-story office tower that was completed early last year, so about a year ago. And about 2 months ago, they submitted permits to complete all the tenant improvements, the interior improvements for that building. It's over 600,000 square feet of office space, and them submitting that permit essentially signals that they plan on filling that space in the next year to 24 months. So you're going to have essentially a 25-story tower that's going to get filled with new employees, either relocating from Seattle or expanding. It could be a combination of the two, but the point is we're 5 minutes away from this tower and Amazon's plans for growth in the area, which are going to drive up the prices in the high-end market here. And again, I kind of alluded to it, but the political climate in Seattle has really pushed some of the larger businesses that have the flexibility to move, have shifted to Seattle over the last few years. There's always a balance between the two markets, but there's been a notable shift between Seattle to Bellevue in the last 4 or 5 years. And that's really, again, bolstered the high-end market residentially in this area. Permit ready, I hit on that already. And then just highlighting that the neighborhood supports prices up to 10 million. So it's really about whether or not you're delivering a product that people want at the quality of finish that they're looking for. And the last bullet there, it's 200 feet away from a neighborhood park that has tennis courts, basketball courts, and a playground. So it's essentially an extension of your backyard within walking distance of this house, which we thought was a really big plus. Okay, next slide. This is just meant to highlight some of the current projects we have going on. I briefly mentioned a 136 unit micro apartment project. We have it under construction now. It's due to complete at the end of this year. It's in the Ballard submarket of Seattle. We just closed on a 65 unit ground up site late last year, and we will be raising capital for it and breaking ground probably the second quarter of this year. And then on the townhouse side, we have 6 townhouses in Greenwood that are being built to rent. So we plan on completing that at the end of this month, and we'll start leasing the units. And then we have a Shoreline 6 unit project that's very near permit approval. Those are going to be large format 4 bedroom townhouses, and we plan on breaking ground in the second half of this year. We will likely raise capital and bring in partners for that one as well. So it's just meant to highlight that we're active in the market. We've been, keeping a pulse on what's going on and looking for the right opportunities. Just highlighting company strength financially, combined personal and company net worth over 10 million. We've got over 40 million in multifamily assets on the top line, net equity of approximately 7 million across 3 projects. And Edric, you can look at the website. That's our first multifamily project. It's a 32 unit building with below grade parking, post-tension deck, which is a complicated structural component of multifamily if you have garages or and then this one here is a project in Greenwood that we just completed about a year ago, and about 10, 11 months ago. And we leased up and stabilized it in September of last year. And we still retain 95% ownership of that building. So we're likely to hold that long term. And this one, we'll likely look at exiting in the next year or two. And then I mentioned Ponte Apartments, which is the 136 units under construction. On the townhouse side, we've got probably a value of about 5.5 million, net equity of about 1 million across multiple townhouses. Some of them we sell, some of them we keep as rentals. And then the last line on this presentation highlights our land purchases or projects that are permitted and ready to develop that are in our construction pipeline. Next slide. So this is a hypothetical. If we took it to the full 20-month term of the note and you had a $100,000 investment, your anticipated return would be 28.2%, which would reflect essentially a 15% annualized return compounded monthly. So you put in 100, you get out 128. If we meet our projected timeline of 18 months, you're putting in 100 and getting out 125.
Yep. Okay. Thank you, Harry. I will take the process of funding, but before that, I will open the floor for any questions. If anybody has any questions, they can raise the hand and I can enable the Mike?
Yeah, and I'm happy to answer questions about past projects, our history, this project, whatever. Um, there's no question that's off limits for me.
Mhm. Okay, so I will continue the process again. Thank you, Harry, for walking through the deal, and we are enabling and floating this deal on the Realty Slices platform. Most of you are part of the Realty Slices platform, but for those who are new, you can go ahead and sign up on the platform, and it's a very simple process to explore the deal and we have enabled a new feature on the platform for SEC accreditation. I'm going to show the platform a very sneak peek of it. So explore the deal and given the accreditation certification process of it, and then sign the docs and transfer the funds. We have made it very simplified and a wizard-based approach. All along the way, you have the right to take the deal, the documents that are available, consult your advisory or legal firms, get it reviewed and come back to us with any questions. Okay. With that said, I will probably just quickly show the platform and how we enabled it to probably process it. So uh, uh, this is our platform Reality Slices, and the deal with all that we presented here with the offering memorandum and all. The deal is live and is available on the home page. And when you click on the view details, it will ask you to log in. If you're new to the platform, you can go ahead and sign up. But for now, I will log in here. Uh, we have simplified the platform in the aspect that you can sign up now with not just with the mobile number, but also with the email ID. Yeah. 1, 5, 2, 3. So Bhaskar has a question. So let me have Bhaskar. I'll let. Yeah, hi Bhaskar.
Can you hear me or no?
Yes, we can hear you, Bhaskar. Go ahead.
No, first of all, thank you all for including in this excellent presentation. So obviously, every project has certain risk. I'm sure you all talked internally. Maybe I might have missed if that came up because I joined 10 minutes late.
Mhm.
What are the risks you all see in this project, considering the political situation going on in the United States and other situations going on globally?
I think probably the biggest risk is construction cost overruns. And we budgeted 1.7 million to build, and then we have an additional $85,000 contingency on top of that. And we also ran a sensitivity analysis showing that if we used up the $85,000 contingency and then went an additional 10% over budget, there'd still be plenty of margin in the deal that the investors get paid their return and our company, the sponsor, still gets a good net profit. I guess the worst case would be you run over budget, the market goes down, and you're way past your projected timeline. That would be like the perfect storm. Um, but based on our experience, we've been doing this for over 17 years, and based on what we're seeing going on in the local market, I think we've done a good job of mitigating those risks. So the likelihood that we have more than one thing go wrong is relatively low, but that risk is still there. So, but I don't know if Bhaskar, I don't know if you were on when we went through the sensitivity slide, but maybe you could look at it after the webinar, or Pavan, if you want to pull it up.
Sure, yeah. Okay.
So yeah, here scenario one is meant to show we run 170,000 over our projected costs, and the second loan still makes their 250,000, and us as the sponsor still hits a $500,000 profit. Scenario two is if the sales price has to be reduced, the second loan would still get their full interest payment. We would still have a gross sponsor profit of 350,000. And even if you combined all three, the third one is at the bottom, scenario three, you run an additional 3 months past your 18-month projected timeline. Even if you combine all three, we have 150,000 in equity in the deal too. So that will not get paid back until the construction loan and the second mortgage and interest get paid off. So you have an additional 150,000 in buffer on top of what you're seeing here on these numbers.
So Harry, thank you. I have one more question, and please don't make anything out of this. It's more of a information. I was told, you mentioned in the presentation that you will give the personal guarantee.
Yes.
And does it come with any collateral then, or what does it come with?
The collateral is the project. The personal guarantee.
But project as a bank as a first lien in the project, right?
Right. Correct.
So what is there in the project if bank takes over? I'm not trying to be
Sure.
a negative here. I'm trying to be realistic. Okay, just the bottom line. That's what I'm curious.
No, I appreciate it. I mean, most of our net worth sits in our company name, so I'd be signing a guarantee as the company and as personally. It wouldn't be tied to anything else, to answer your question. This project is the collateral, but it would give you the opportunity, if you didn't get paid back for some reason, it would give you the opportunity to go after our other assets to recover your investment.
Other assets of the company, you mean?
Yes, and personally, because I'll sign personally and as the company.
Nice. So thank you. Please don't read anything into that. I'm just trying to be curious
No.
because some of us have burnt our hands in some few situations. That's why I'm curious. That's all. Thank you.
Yeah, no problem. Thank you for the questions.
And also to add on the neighborhood side, I think this neighborhood is more of an executive class, and I don't know, we are probably maybe 15-20 minutes away from where Bezos and Gates and all of the executives live, right?
Yeah, it's not even, it's more like 10 minutes. You drive up, if you drive up Bellevue Way, you're in Hunts Point, Yarrow Point, Medina.
Right.
So,
right.
yeah,
That's a place where a lot of the executives live, and I think this the segment for these are more of executive class, and there are a lot of executives who live in that area, including Bezos, Gates, and others, who are probably 5-10 minutes away from this neighborhood.
Right. Thank you.
Sure. Thank you, Bhaskar. Anybody else? Any other questions? Okay. Sure. Okay. Going back to the platform, once you log in, you get to see all of the offering details, and we have included the aspect of offering documents that includes, we kept in the construction loan letter of intent by the bank. You can download it, click on it and download and go through it. We have placed the approved civil plans, City of Bellevue building permit. We have also placed the AK Investors LLC formation, that shows the history of the company and the members of the company, that includes Harry and his wife. And also the document that we just presented, offering document, is also available here. So you can go through all of these documents and have the due diligence on the offering, and have it reviewed by your legal or attorneys to make sure that the secured notes, and along with the secured notes, we are also attaching an addendum to it that includes, it's going to be a full recourse loan. Okay, so that in the event of anything on the south, we can always go behind the AK investors and the personal guarantee. Okay, so once you log into the platform, we added a new feature, which is, if you go to the dashboard, we have added investor accreditation. Now, previously, for all of the funds, we asked our investors to go outside the platform and get access to the accreditation. But over here, now the platform offers a free accreditation for our investors. So it's a very simple wizard of 5 steps. We can select as an individual or an entity, and you want to get accredited by income qualification or net worth qualification. You can select this. Subsequently, it will ask you to upload the documents, and we have associated with, we are not the ones who will review and give accreditation, but we have partnered with CPAs and certified accountants, and they are the ones who are going to basically review these documents. And all of these documents are securely stored, encrypted, and made it available to our CPA firms. Okay, they will review the documents and then provide an accreditation verification document. You get to download the document and not only use as part of this offering, but also for any other offerings. Okay, we just are in the process of launching it in the early week of January, and we're glad that we can associate this with Harris Investment, and those of you who are participating in this deal can get this accreditation and participate in the investment process. Any questions in here? And Nagesh, you want to add something? Okay. Probably I need, let me allow Nagesh to talk. Hey, Nagesh.
Yeah, now I'm unmuted.
Yeah.
Thank you for the presentation, Harry and Pawan. I just arrived in India, so I've logged on to the entire presentation. We are the process is very streamlined. The documents are all there. Any questions you need, please ask us, and we will, ir@realtyslices.com, and you'll get, quick responses to whatever questions you might have. We will be posting this presentation and the recording on the portal. There are a few changes that we would make to the deck where it says senior loan interest. It's actually the second lien, that is our lien. That's one change. Second, on the portal, it says 1.5 years. It will be changed to 20 months to align with this. I'm just giving that information so that you know what will be changed between the deck that will be there and the deck that you just saw. Any other questions, let us know. The deal is on a pretty short fuse because 25th Jan is the closing. We wanted to quickly do the webinar right now because I also know that Sankranti is coming up. So we wanted to get this into your, into your psyche before you go festive. This would be a good, we think it's a good deal to invest in this particular offering because of a variety of reasons that were already mentioned, and the soundness of the sponsor that is coming up. But ultimately, you should make your own risk-reward assessments, talk to your advisors, and then decide on the making the investment. Thank you all for coming in such short notice. I think we had